The cut has come. The Bank of England has voted to cut interest rates to 4.5%, with the bank's governor saying the move will be welcome news to many. But he didn't commit to more cuts in the months to come. He warned inflation will go up and said the outlook for the economy has worsened. It isn't the news the Chancellor will have been wanting. With the details, here's our political correspondent, Harry Horton.
After years of high interest rates, estate agents hope the worst is now behind them. And the Bank of England's latest cut will help boost confidence in the housing market.
I don't think anybody is expecting interest rates to go back to the levels they were. And that's fine. But we just want to see a sort of a new normal and find that level, really. And if we can do that this year, that will help restore confidence in the housing market.
Confidence in the wider economy, though, is lacking. And today, the Bank of England governor said high energy and food prices would drive up inflation.
We live in an uncertain world, and the road ahead will have bump sides. We expect inflation to increase this year to a peak of about 3.7% before returning to the 2% target. And we will set bank rate to ensure that it does so sustainably.
But the bank has downgraded its growth forecast for the UK economy in a blow to the Chancellor. Back in November, it forecast a growth of 1.5% this year. But today, the bank cut its prediction by half to just 0.75%. Beyond this year, things don't get much better, with 1.5% growth forecast for both 2026 and 2027. Businesses face an increase to national insurance and the minimum wage, and this cafe says those extra costs will be passed on to customers.
I'm very price sensitive about passing on to the customers, but unfortunately my hands this time is very, very tight. We won't have massive reserve like the big companies.
And in an era of tariffs and trade wars, the outlook for the UK's economy is far from certain. Harry Horton, ITV News.